It might seem like a good idea to max out your credit card to make some quick cash because you are in a bad spot financially, but there are some serious consequences. Hi, I'm Alex, and in this video I'll show you why maxing out your credit card can actually be really dangerous for your financial future. First of all, maxing out your credit card isn't going to solve any problems. In fact, it could make them worse. So stop carrying that weight on your shoulders and watch this video instead. When you decided to spend all your credit card limit, you weren't thinking about the interest bill coming due in a few months. That's because it's not your money. It never was. You just borrow it from the bank. So fast forward, I'll show you 6 reasons why you shouldn't max out your credit card. Number 1. Maxing out your credit card is not going to solve any problems. What does this have to do with you? Well, the answer is that credit card debt can have a tremendous impact on your finances. It's enough to think about the consequences of not paying back what you owe, but there are many other worries as well. And if your income is unstable or uncertain, credit card debt can be a nightmare. Maxing out your credit card can be a lot like adding heavy weight to your shoulders when you are trying to get something off the ground. It can crush and destroy your dreams. You need to be able to think straight and focus on taking hold of your own financial future. By not solving your problems, I mean that interest rates which are very high, and some people actually carry them for years, making the debt even more expensive. It's easy to pay the minimum, but it's not the right thing to do if you are trying to eliminate your debt. The last thing you want is to take on more debt just because you don't want to deal with what you already owe. Number 2. You'll find it harder to pay your debt off. Debt is a big problem for many, and more than half of these consumers are in financial distress. It makes sense then that the process of paying off debt ought to be as painless and straightforward as possible, yet according to Forbes, it isn't. Part of the problem apparently is that it's hard enough to calculate how much debt you are taking on without any mention made about how long you should keep paying it off or when you'll start earning interest again. You'll find it harder to pay your debt off because of the high interest rates. When you are paying off your debt, your monthly payments won't be that much, but if you have a high interest rate on your loan and more than 1 or 2 loans together, you'll start spending a big amount of money every month for repayments that don't even go towards the principal. This will make it harder to pay it off. By the time people realize how much they are spending on their debt repayments, they'll also find it hard to pay them because of the high interest. Number 3. You might have to deal with a lawsuit. For most of us, the mere thought of a lawsuit is enough to panic us into inaction. A lawsuit for not paying your credit card debt is a lot more common than you think. It's not uncommon for credit card companies to sue debtors when they want to assert that a debt is still owed, even after it has been paid in full. A lawsuit often occurs when you are delinquent on your credit card payments, or the credit card company is just trying to settle an old account without sending a collection notice. A collection agency will contact you and schedule an appointment for less than what is owed on the account. When the collection agency attempts to schedule an appointment, a lawsuit often follows. But just because credit card companies can sue you doesn't mean they will. In most cases, they will avoid a lawsuit and the cost of litigation if at all possible. So don't do anything that might make them want to sue, such as not paying your credit card charges on time. Most credit card companies and collection agencies allow consumers to dispute their delinquent debts after the debt is paid in full, even allowing them to make minimum payments. Number 4. Credit card debt could tarnish your credit score. Credit card debt can be a vicious cycle. Misuse credit cards and you'll find yourself running up high interest payments, which can grow into more expensive debt. In addition, the credit score takes into account the credit utilization ratio and will dip even lower as a result of not paying the debt. Now guys, a lower credit score can affect you when you are looking for a mortgage or car loan down the road. Your credit score's 2 most important factors are on-time payments and the amount of credit you use. Using a credit card responsibly will help build a good credit score, which can save your money in the long run. By not paying your credit card debt in full can have serious consequences on your credit score. Your payment history will be exposed in your credit report. In fact, in some cases, not paying your credit card bill at all could be worse than paying late your monthly payment. Late payments can damage a credit score up until 7 years, which is why I discourage late payments. Your credit history will reflect your spending habits as well. So, if you are considering not paying your credit card bill on time, realize that it can follow you for many years. You might be surprised at how much of a drag this can be on your credit score. Number 5. You'll be paying for a really long time your credit card debt. Your income largely determines your levels of debt, and the amount you spend is up to you. But the price that will be paid on a credit card is not up to you, and it stays on your credit score report for a year. You'll be paying for it for a really long time. As the debt grows, the interest rate goes higher, hence you pay more for it. The interest will stop you from pursuing other goals in life, and it's very unlikely that you would have gotten into trouble in the first place without having other outstanding debts on your credit report. If you try to pay off your debt by making minimum monthly payments, you will pay a lot of extra interest and you will not be able to get rid of your debt. Also, the credit limit goes down, making you pay a higher interest rate, which will make it even harder to get out of debt. Not paying your bills on time or to full amounts can be a real problem for a couple, where one pays the bills for the other. It's easy to forget that debt isn't yours, and it may come down to who gets to be blamed. Number 6. The interest on your credit card debt is going to keep increasing the more you owe. If you're wondering how much interest you are paying on your credit card, it's easy to find out. The most common way is to call your credit card company and ask them. It can be for old or new accounts as well, but there are several other options as well. It's a scary thing to look at, but it's just the way things are. The interest keeps increasing, just like your debt will keep increasing as well. When you max out your credit card, you'll find it harder to get a loan in the future because your debt will be higher. Now, imagine if you are trying to get a mortgage for your new house or even just a new car. A high debt to income ratio can disqualify you from a mortgage. How likely do you think the bank would be to lend you money if yours is maxed out and your payment history prove it? That's right, very unlikely. Well guys, I'm not saying you do this, but if there is one thing I've seen over the years is that people who take the most advantage of credit use it as a lifeline. They plan and use it to extend their time spent in school, postpone buying a house or car, and save for retirement. It's nice to get a credit card, have a nice credit limit, and use it for big expenses. But the best way to do is never to max out your credit card and use it for true emergency within a clear budget. Your credit utilization rate has a big impact on your lending trustworthiness. Why? Well, to make money, you need to have a predictable income. When you get a credit line, you have no idea how much money you will be able to take out. Your spending patterns determine how you'll manage your credit. A credit card uses debt as the money supply. It's easy to get a credit card, but hard to pay it off. If you max out your credit cards and then later run into a financial crisis, you'll be in trouble. If you don't have enough to pay off your credit card, you may not be able to get a job and not having a monthly income. So don't max out your credit cards, and if you want to spend, use debit cards or use cash. Thank you for watching. It's 2021, so please subscribe if you aren't already, and I will see you soon.